That's right. Well, thanks a lot. Thanks a lot for your time. We are into very exciting and dramatic times, aren't we?
Well, exciting, I guess, is a difficult word because it's going to be very bad. I mean, I guess bad things can be exciting, but for a lot of people, it's gonna be terrifying, not really exciting. Although I
Yes.
guess you can be terrified and excited at the same time, like on a amusement park ride.
No, I have to because people like us, I guess, have been predicting such events, and certainly you have predicted this kind of bubble bursting. Obviously, knowing that this kind of virus would be the pin that bursts the bubble is difficult. But what is your view on the economic side of this crisis? Because it's very unique in the history of recent history, really.
Well, look, the pin is definitely unique. The bubble is not, other
Hmm.
than the fact that it's the largest. So I guess what's unique about the bubble is the enormity of the bubble and the fact that the bubble is kind of worldwide, but it's far more pronounced in certain economies than others. In particular, the United States, where I think we have the biggest bubble of all. But you also have bubbles in other major economies, and they've all been pricked simultaneously, kind of by the same pin. Although I think the U.S. bubble was already starting to deflate before this pin came around. But that is the problem. The problem is not the coronavirus, although that is a problem. And I don't want to
Sure.
minimize the fact that it is a problem, certainly a health problem and even an economic problem. But the larger problem that people are overlooking as they're focusing on the pin and ignoring the bubbles is how ill prepared we are for this crisis or any other crisis that might have taken us by surprise. Because if it wasn't the coronavirus, it would be something. I mean, particularly in the United States, where we have no savings for a rainy day. We just assume that the sun is going to shine indefinitely, and so we don't put anything aside. And that is the reality that we have no savings, and companies are levered to the hilt. Individuals are levered to the hilt. Governments are levered to the hilt. And so trying to borrow and print more money just makes the economic problem worse. So what central banks are now doing is not solving the problems that are created by the coronavirus. It's actually exacerbating them. We're really doing more damage to our economies with our cure than what the disease is doing.
Yes. And the lack of preparation is incredible, showing that so many parts of the economic world are suffering. Tourism, travel. Now we have oil. What's your view on the current incredible situation? You have negative oil prices to add on negative interest rates now.
Well, we had negative oil prices for a day.
Yeah, of course.
And whether or not we end up getting negative oil prices again, it's hard to say. I mean, nobody really expected it before, and so it caught everybody by surprise. Now people are kind of on guard and realize that oil prices can go negative. So maybe they won't do it again. I don't know. But the reason that oil prices are so low is because very few people are using the oil. I mean, nobody is traveling. People aren't flying around. People aren't driving to work. In fact, a lot of factories aren't operating, so they're not using energy. And so prices of oil are down because people aren't using oil, which doesn't necessarily do you any good, because if you're not buying oil, what difference does it make how cheap it is? What matters is what's happening to the prices of the things that you are buying. And if you look at what's happening to prices of goods that people are buying, they're actually going up. They're going up more now than they were before.
So the social consequences and economical consequences are very much linked. Are we, in your opinion, entering more than a recession, like a depression?
Well, I mean, I think the U.S. is entering a depression. I don't think the depression is going to be global. I think it's going to be concentrated in certain economies, particularly the U.S. Um, but I think the emerging markets really are going to be entering a economic boom as some of the developed markets are entering a bust. So I think it's going to be really, a tale of two outcomes, because I think that the U.S. dollar is going to suffer a fatal blow. I think it's going to lose its status as the reserve currency, and I think the world is going to move on from this system and probably go back to the gold standard, which existed prior to Bretton Woods. And so that will remove the extraordinary privilege that America has enjoyed during this time, where Americans don't have to produce, but we can consume, and we don't have to save, yet we could borrow. And so that has enabled America to live well beyond its means, and that has imposed the cost on the rest of the world, particularly the emerging markets, of subsidizing and supporting the U.S. economy. And so America has lived above its means, while other people have lived beneath their means to make that possible. And so when the world is no longer propping up the U.S. dollar, supplying Americans with goods and loaning Americans money, that means that there will be a much greater supply of goods available for the emerging market consumers, and there will be a lot more capital to be invested productively in those economies, rather than being loaned to the U.S. government or American consumers. And so I think you're going to see a big decline in the standard of living in America, but at the same time, a substantial increase in the standard of living in these other countries that have been doing all the hard work, producing the goods, doing the savings. And so I think you're going to see asset prices also moving up in those economies. So I think, you're going to see tremendous losses, but also tremendous gains, depending on, which country and which market.
And yet, at the same time, the U.S. stock markets are almost at an all-time high. They're rebounding very strong. Why do you think that is happening?
Yeah, well, that's true. If you look at the big market, like if you look at the S&P 500, we're not too far from the highs, a little over 10% from the highs, despite collapsing earnings. And that's because the Fed and other central banks are printing money. If it wasn't for this, stock prices would have collapsed. But if you look at the smaller stocks, look at the Russell 2000, for example, we're better than 35%, I think, still from the highs. The Russell 2000 has wiped out 7 years of gains. So there are a lot of stocks that are just getting killed, except that if you look at the averages, you can't see that carnage, because you got, big stocks like Amazon and Netflix, that are just going up and up and up. But beneath the surface, there's been a lot of damage to the U.S. stock market, and I think that damage is going to continue.
How long do you think that the Fed can prop up such at least the big indexes?
Well, look, they can indefinitely prop them up in nominal terms. Right? Obviously, if you print enough money and destroy the value, then the price of everything will go up. But, they haven't been able to prop up the market priced in gold. You can see the gold value of the market continuing to drop, and there's no way they're going to stop that. I think U.S. stock prices have a long way to fall priced in gold. Mm-hmm. But what's really going to be a problem for the Fed is when the U.S. dollar starts to really fall relative to other fiat currencies. See, that hasn't happened yet. Mm-hmm. You still have the dollar holding on to its, levels against the euro, against the Swiss franc, against the yen, against the pound, these other currencies, and some of the commodity currencies, Australia, New Zealand, Norway. But once the dollar starts to fall against these fiat currencies, which it will, that's when the party's over for the Fed. See, as long as they could print money, and we're not seeing the results in the foreign exchange markets, the Fed can get away with it. But once the dollar starts to crack, it's a whole new ballgame, because that's going to put tremendous upward pressure on long-term interest rates and on consumer prices. And then you go from not just recession, but to stagflation. And then the Fed is in a box from which there is no way out.
Now, you've been advising gold as a great investment for many years now, and recently it has been one of the best investments. How do you think this is going to continue, and also how to be careful not to get caught into paper gold and that doesn't have anything backing it?
Yeah, well, you've got to be careful with derivatives, as we saw with the oil market going negative. People were buying oil through ETFs, but they weren't really buying the oil; they were buying futures contracts, and they ended up having oil go negative. I mean, real oil is never going to be worth negative, but these futures contracts were, and so people in paper oil ended up getting completely obliterated. The problems with paper gold could be on the other side, because in the oil market, it was, the longs being forced to accept delivery of a commodity that nobody wanted, and there was no place to store. But I think at some point in the gold market, the shorts are going to be forced to deliver gold that they can't get, that they don't have. And so the best thing is to actually buy the physical gold. I have a gold company, Schiff Gold. We can sell you and ship you bullion around the world. You can own it yourself, so you got it. You're not relying on some third party that pretends to have it. Maybe they do, maybe they don't. I mean, why introduce that extra element of risk when you could eliminate the risk by just owning the gold yourself? It's not very expensive to store. In fact, you can store it for nothing. I mean, you just store it yourself. But I think the best buys right now are these gold stocks. It's crazy that nobody owns them. These things are just going to go ballistic. They're a great hedge because no matter which way the market goes, I expect gold stocks to go up. They've already more than doubled from their lows a month ago, and I think the rally is just getting started. I think if stocks go up because central banks are printing money, well, then gold stocks will go up more because inflation is better for gold stocks than any other stocks. And if the markets decline because of recession and falling earnings, well, gold stocks will go up then too. Because the weaker the economy is, the more money the central banks are going to print, which means the more inflation and the higher the price of gold. So the gold stocks are a win-win. I mean, and so people need to buy them. We offer separately managed accounts. People want me to manage their money in gold stocks. You can go to europacificfunds.com and contact us. We also have a mutual fund that people can buy that owns gold mining stocks. The ones that are going to go up the most, the ones that can go up 50 times, 100 times, these are some of the junior mining companies, the exploration companies, and we have a great portfolio of those. I don't recommend that people try to pick those themselves because you never know. You could buy a company that goes to zero. There will be companies that go to zero, but you want to avoid those. If you're just buying the big major companies, just buy them because they're going to go way up. But they won't go up as much as the small ones. But you got to make sure you get those right and you get a diversified portfolio because you'll never get all of them right. And so that's what we're doing with our clients. So I would suggest to people, before these prices just really go ballistic, and I've been saying this now almost every day on my podcast, and the prices just keep going up, 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 and I keep pounding the table that, you just got to buy these stocks because at some point they're just going to go vertical. At some point, the major Wall Street firms are going to discover gold stocks. I mean, so far they haven't. I mean, nobody talks about them, nobody buys them, and yet they keep going up in price. So if they can go up like this without anybody buying them, imagine what's going to happen when people try to buy them.
Sure. Now, one last question, perhaps. Now you have a great podcast on YouTube, and in it, among many other things, you have a very bold and fearful prediction, which is that because of this bubble exploding, the United States is going to move politically to socialism. And in the current election cycle, there's a great risk that President Trump will not be reelected. Do you see, why is that? Well, I know why it's fearful. We all would never want to have socialism again, ever, anywhere. But how do you substantiate that prediction?
Well, first of all, we've already moved substantially in that direction. In fact, remember when George Bush in 2008, when he signed the bill for the TARP, he said that we have to abandon capitalism to save it. Well, we needed to embrace capitalism to save it. The problem is we abandoned it, and that's why we're moving to socialism, because the policies that we implemented following the financial crisis were socialism. In fact, the reason we had a financial crisis was because of socialism. Socialistic policies crept into the market and, corrupted capitalism. And so whenever you have a mixed economy where you have a mixture of capitalism and socialism, the socialist part does damage. But then it's always the capitalist part that gets the blame. And so the solution is always we just need more government. But that just makes the problem worse. And now the problem has gotten so bad that capitalism is so completely discredited that socialism is seen as a viable alternative, even though socialism is a complete disaster. But even the Republicans now are socialists. I mean, they pretend to be capitalists, but they're in favor of all the bailouts. They're in favor of all the stimulus. They don't want to let any companies go under. They want to bail everybody out. They don't want people to lose their jobs. They want to keep paying companies not to fire people. I mean, what does that have to do with capitalism? In capitalism, companies have to fail. That's an important part of capitalism. You need the failures to have successes. You need to have people worried about risk, not just worried about reward. You can't, privatize the gains and socialize the losses. It's a complete disaster. And if companies are not profitable, they need to downsize. They need to let people go. I mean, that's part of the way a market system works. Labor has to flow from where it's not needed to where it is needed. But if government calcifies employment in businesses that are losing money, then it prevents the economy from restructuring. You have a misallocation of labor, which is a disaster, and you perpetuate misallocations of capital. So the government is creating tremendous damage by this intervention in the free market, and therefore we're going to have a depression and massive inflation. But the public is not going to understand that the government is the cause of the problem. They're just going to blame it on capitalism. And that's what the politicians are going to blame it on, as they're promising to solve our problems by doling out free money. And then the money is going to collapse in value and prices are going to skyrocket. And, this is the history of democracy. I mean, history is littered with democracies that have collapsed because people vote in socialism.
Yeah. I'm afraid it's true. Well, Peter, I know you're out of time, but thank you very much. And I will encourage everyone who's listening to us to check out your YouTube channel, your Euro-Pacific Capital website.
Yeah, you can listen to my podcast on YouTube. You can also just go to schiffradio.com and get a higher quality. Now I'm doing video on YouTube, but if you just want to listen in your car, you want to have a better quality audio, and it's a little cleaned up, you can also just listen at schiffradio.com. To the podcast.
And of course,
or,
if
you go to iTunes or Stitcher or wherever they have podcasts, my podcast is there.
And if you ever need to flee socialism, you're welcome to come here to Switzerland.
Yeah, Switzerland has been practicing quite a bit of it. It's amazing, too, that instead of buying gold, the Swiss National Bank just loaded up on U.S. stocks. I mean, it's too bad that, you guys voted down that referendum to require the Bank of Switzerland to buy some gold. I mean, it would have been a much better use of their francs than buying overpriced U.S. tech companies.
Absolutely, but we are also democracy, so we are going to end up the same path as everyone else sooner or later. Thank you very much for your time.
All right, my pleasure.
Take care. Bye-bye. Have a good day.